Hello, everyone. I guess you all must have heard that success is no accident. It comes with a lot of efforts and obviously hard work. And today we have such a personality in our room who is true example of this saying. We welcome you, Rajesh Singla sir, who is CEO of Planify and again founder as well, and fund manager at VentureX SME Fund, which is their first offering. We welcome you, sir.
Thanks, Anshika, for the warm welcome.
Thank you so much.
Pleasure to be here in front of you and your audience.
Thank you so much, sir. Firstly, sir, we would like to know about yourself, basically your journey and the company's journey, how the entire plan came in action. We would love to know.
Right. So Planify started 6 years back.
Yeah.
And at that point of time, I saw an opportunity where pre-IPO investments or the investments in the SME space were not available to the normal investors.
True.
To the normal HNI investors. So that is what we focused on, and that is where we got an extraordinary response from the investors, as well as we were able to help out the entrepreneurs in their fundraising process and also give exits to a lot of angel investors who invested in these companies and they wanted to have an exit, or the employees who were having ESOPs with them. If they wanted to liquidate their shares, we were able to give them liquidity. And on the other side, people generally were not able to invest in the IPOs. They do not get IPOs are highly oversubscribed.
Yeah.
So at that point of time, investors want to invest in good organizations. So we were able to offer them good organization in the form of pre-IPO, in the form of SME. They were able to invest early into the companies. So it was a win-win situation for both. People who wanted to make an exit, they were able to get an exit, get liquidity. And people who wanted to invest, they could invest in these companies at an early stage than the IPO.
Okay, great. So basically, when it comes to investment, when it comes to, choose a specific sector, specific thing for your company, it always take a lot of discussion, hard work and team discussions and all. So why SME? What eventually convinced you for SME?
It is returns. Whenever you invest in any company or whenever you invest anywhere, the first thing which you expect is or you see is the returns, the kind of returns it is able to generate. So if I compare SME with any other form of investment, let's say we compare SME with small cap or Nifty itself. So SME index has given much better returns than small cap as well as Nifty 50.
Okay.
I'll give it with an example. Like for 1 year, 2 year, 3 year, 4 year, 5 years. For any year, if we see, SME has outperformed small caps by 400 times. For 5 year tenure, it has given a return of 973%. Whereas if I compare it with Nifty small cap, it has given a return of close to 247%, which is almost 4 times equivalent to a small cap fund.
It's huge.
It's huge. And if we compare it with Nifty 50, Nifty has in last 5 years have given a return of close to 128%, which is again 800 times. So for SME, it was 973, which is like 800 times as compared to Nifty 50. So that is the reason we ask or we feel that because you are able to make the best returns in SME, this is one of the reasons we pick SMEs. Yeah. Even from a CAGR point of view, SME has again outperformed. This is the absolute returns which I talked about earlier. Yeah. If we compare it in terms of 5 years in CAGR returns, so SME has given a 61% CAGR returns versus 28% of small cap versus 18% of Nifty. So the outperformance is huge. This is the reason we love to invest in SME organization. And the reason of outperformance, Anshika, is when the company, let's say if a company is having a profit of let's say 5 crore, 10 crore or 20 crore, and once they do their IPO, let's say the IPO is happening for 50 crores or 100 crore, they're able to put that money into the capex, into the business expansion. And in next 2-3 years, this 5 crore, 10 crore, 20 crore profitable organization is able to their profits jump to 50 to 100 crores, anywhere in that range, if the organization is able to scale them itself.
Wonderful.
So that is the reason even like it gets reflected in the share price. The share also multiplies.
Obviously.
And because there is a P re-rating which happens in these stocks. There is an extreme returns which we are able to generate in SMEs. This is the reason we pick SMEs over any other index or over any other assets.
Clearly it make a lot of sense again, because now we talked about the numbers. We would also like to know that what is your investment thesis eventually?
Right. So investment thesis. So we like organizations which are growing at a fast pace.
Yeah.
Though the stock market has a simple fundamental.
Yeah.
The pace at which the company is growing, it will replicate. So the share price will replicate at which the pace of the company is growing.
Okay.
So if the company is growing at, let's say, 100%, the share prices should also increase by 100%.
Yeah.
It could be because of the euphoria, the price actually increased by 400, 500%. And because of the depression, the market didn't give you an opportunity, like the share price didn't increase.
Yeah.
But in longer run, this averages will work out. Like the share price will always reflect the pace of the growth of the organization. Because of the pace of the growth of the organization, as we earlier discussed, is best in SMEs. So this is one of the themes, that it should be a high growth company.
Yeah.
The second point is the valuations.
Yeah.
Companies where we are investing, we don't like organizations which are at very high P's. Means where overall the average cost of the entering into the organization or the valuation is very high. We like organization where we are able to enter at a lower P's or lower EV by EBITDA values. The third thesis which we see is the corporate governance and the management team. Overall, the corporate governance of the organization should be high. They should be able to follow all the compliances, do all the disclosures, and the management team needs to have a vision, have a big vision, how they are going to construct their business or develop their business into a higher entity. So all of these constitutes into our thesis.
So again, I would love to know that what are the factors which make you choose to invest in other companies, and which make you choose to add some companies in your portfolio, basically.
Right. So the first point, so we call it as LMVT framework.
Okay.
So L goes for leadership.
Okay.
M goes for moat.
Okay.
V goes for valuation.
Okay.
And T is the tailwinds.
Nice. Okay.
So now coming back to the leadership. In leadership, there are few pointers which we check. We call it as a overall, we basically give a score to any organization before we invest. So in leadership, we will check what is the overall management team look like, what is their competency, how what is the vision of the organization, how they are thinking of making the organization big. So in the moat, we do check what is the margins the company is able to generate. Is it better than competitors? Do they have any IPs? Do they have any patents? And what is the market size in which they are working? The market size of any business should be big enough that so that the organization should be able to scale themselves out. So that comes under moat. The third is the valuation part. Overall, as I earlier also mentioned, that we love organization where we are able to enter at a decent valuations. So we like organization where we are entering at either undervalued opportunities or at par. We don't enter into organization which is commanding very high P's. So that is for us is generally the selling point rather than the entrance point. And the fourth, again, Anshika, which is very interesting, is the tailwinds. So it is the government, where government is spending. So today you would have heard the government is spending a lot on solar. It is spending on defense.
True.
And in the world itself, a lot is coming on the AI, artificial intelligence.
Obviously.
These 3-4 main sectors. And then there are a lot of things which government put their plans in their budgets. So, but it doesn't get covered because it's like, it's not show business where a lot of eye-catching or entertainment is getting served, and it doesn't get covered by a lot of media people. But if you go under the lines, I'll give you a few examples.
Sure, please.
So the first is like government is spending a lot on Kavach. So now Kavach, it basically helps the two trains to collide.
Yes.
So in India, there are n number of collisions which happen in train, and there are a lot of, unfortunately, and there are a lot of fatalities which happen. So that will not happen once this Kavach technology gets deployed across India. And in this sector, in this Kavach policy, there are only 5 or 6 companies which have the complete patents and the technology to deploy it, and they are approved by Indian Railways. So this kind of organizations we love because they are going to get natural business.
For sure.
As government is spending on Kavach, every year they are increasing the budget. Similarly, government is spending today on electronic meters. Not many organizations are having this capability to actually put in electronic meters. The third could be even the so there is a scarcity of water in especially tier 1 cities. We have already seen that in Chennai.
Yes.
Similarly, the same problem has started arising in Bangalore. So government has started putting budget till 2030. There are and every year this budget is going to increase. So that all the tier 1 cities, be it Delhi, Ahmedabad, even other cities gets covered, and people does not get devoid of water because water is a
Basic necessity. Yes.
So these areas again, these does not get very good limelight, but you need to do a lot of research to get to what companies are going to get benefit out of these budget allotments. So we do invest in these kind of companies where we are able to generate a good alpha over the normal Nifty 50 shares.
Wonderful. It was wonderful knowing that what research goes behind all of this hard work. It obviously looks good on cameras, on screen and everything. It looks good to hear. But again, when you just dig into it, you realize how much hard work does it take and how much research it takes. So if we are talking about the research, then, teamwork obviously matters a lot. One person can obviously, create a company, but to run that company on the ground level, you do have a good team. How does your team work eventually when it comes to investment, when it comes to other chores, which in general you guys do? So we would love to know that what team work as being a investor or being a SME company.
So we are a team of 75 people. So Anshika, you hit on this right point that if you need to grow as a business also, you need the right people to join you.
For sure.
So only you will be able to scale your business.
Yeah.
So at this point of time, we have around 75 people in our team.
Wonderful.
And so in this, there are about 15 analysts who looks at these companies, do their research work. Once any company gets approved in our this framework, so then they bring these companies to us. So in our investment committee, I am the fund manager. There are a couple more people. So one is Ishima. So she is our chief investment officer. She takes care of all the due diligence and the research work of these analysts. And we also have Manish Nath G with us. So he before so if I talk about Ishima, the credentials she has, before she joined us, she was working with the likes of ENY. She was there for 12 years, working as an valuation analyst and a manager. And she was taking care of Europe's valuations. She understands nitty-gritties of how a business needs to be valued, what are the risk mitigations and all of that stuff.
A much needed thing for sure.
Much needed thing for before you invest into an organization.
Obviously.
And we also have Manish Nathji. So he is also a part of our investment committee. So before he joined us, he was earlier with the Wall Street. So he spent about 15 years there. He was a part of, he was a fund manager for a US based hedge fund, Arkstone Capital. So he was running their Passage to India fund. And across world, this Passage to India fund, while he was managing it, was ranked as #1 AIF across the world.
Wow, great.
It's not a gimmick to get there. More than 50,000 AIs were there. So there basically the idea is the team itself understand what it is to see into an SME company before we invest in that organization, or be it even in the pre-IPO side. So we do our due diligences before we invest. So apart from these 15 analysts, we also have around 24 people in the investment banking side who work with the investors, who work with the founders in getting their investments done, as well as getting the fundraising done. And then there is other teams in the marketing, finance, and all of the team is structured.
Wonderful. We can clearly see that if you are here, obviously, wherever you are, wherever your company is, there is a team behind it. There's a team who is actually working very hard to get here. Wonderful. What is the target size of your AIF fund?
So at this point of time, we are targeting 1,000 crore.
Okay.
So basic idea is to actually onboard 1,000 investors. So even if minimum investment for any investor is going to be 1 crore.
Okay.
So once that, so if an investor is getting on board, he may even look to invest 2 crores, 3 crores, 5 crore, according to his capacity. So our main objective is to onboard 1,000 investors. Once that 1,000 investors gets onboarded, this fund is going to get closed. Like we cannot have more entries. So we might end up doing, rather than a 1,000 crore fund, we might end up doing a 2,500 crore fund, or even maybe a 5,000 crore fund.
Wonderful.
So this is basically the idea. And the investment in this fund is also like simple. Like you don't need to give the money in a single go. Like you need to invest 10 lakh rupees per quarter. So in a year time, if an investor is committing, let's say 1 crore, so they need to only invest 10 lakh rupees per quarter. So in a year time, it comes out to be 40 lakh rupees per year. And in 2.5 years, your money is going to get deployed into these SME companies. See, Anshika, we don't feel, so the reason again behind this is we don't feel we have enough opportunities to deploy this 1,000 crore in a single go. That is the reason we have deferred it, like the investment we are taking from the investors, we have deferred it over a 2.5 year horizon, so that whenever we are calling in the money, we have good opportunities in the SME space to invest.
For sure. So there again a question arises, why Planify? Why investors should choose Planify?
It is because of our track record. The kind of companies we have brought in. We have done 33 exits so far. Before AIF, so at Planify, while we were doing this, investing into pre-IPOs, investing into SMEs, this is kind of an unstructured product. Now we have got into VentureX SME Fund, which is a SEBI approved product. It's a more structured product. Investors have more visibility on the investments what we have done, how they are performing. They'll get their monthly reports on the NAVs, on the performance of the fund. So that is the reason we say that people should look at Planify or VentureX SME to invest.
Indeed, Mr. Rajesh gave the perfect reason to choose Planify for sure. So, sir, again, we discussed it, I guess, off camera as well. What exactly attracts you towards investment, towards these financial backgrounds and all? Like, do you have such a background, your family background or something like that? Or it gives you kick, which we in general say?
So I'm a Punjabi baniya.
Oh, now it all makes sense, right?
So
yeah.
in generally it is said that for baniya, money runs in our blood. So and while you make, so there is only two ways which I understand how we can actually make good amount of money. One is to run your own business, the other is to invest.
Fair enough.
So we have opted for a business where we are investing into other businesses.
Wonderful.
Clubbing both the things.
Yeah, great source of making money for sure. Okay. So at last, sir, I would love to, not me just, but I guess and the entire audience would love to know that what message will you give to the audience out there who are young entrepreneurs or who are planning to be one?
So for young entrepreneurs, I'll always say don't quit. There will be very hard days. There will be good days. There will be bad days. There will be hard days. At that point of time, so failure is not an option. So what I have always believed is that it could be delayed. It is not that you will not get to the success.
Yeah. And some tip if you do want to give to the people?
So from an investor point of view, I generally say we don't believe in giving tips, but what we have always believed in is investing into good businesses.
Yeah.
So investing, so there are three things which matters. Entering into the right business, what time do you need to enter? And what time do you need to exit? These are the only three things which will make you money.
Yeah.
So from an investor point of view, they need to time their entry as well as exit, and what business they are investing in. That is the most important thing.
Wonderful. We undoubtedly got to know more about investment, about finances, and especially how to make good amount of money from none other than Mr. Rajesh Singla, sir, who is CEO and founder of Planify. Thank you so much. Me and Shika Sharma signing off.